Welcome back. The stock on our radar is CCL Products. Now, you would look at their fourth quarter numbers and you'd say, okay, here's the company which has reported its revenue growth of almost 40%, but EBITDA hasn't grown in line and the net profit has too seen a decline. But, there are a couple of internals that need to be monitored. One, the revenue has grown apart from volumes, largely because of increase in the commodity price and increasing capacity. EBITDA for the company is largely locked on a per kg basis. So as a result of which, we do not see a concomitant increase in the absolute EBITDA, and the net profit, of course, impacted on account of their higher capacity and finance costs as well, which resulted in both higher depreciation and finance costs. So to talk us through the outlook for the company, we do have with us Challa Srishant, who is the Managing Director of CCL Products, joining us on our show. Challa, thank you so much for joining in. Always a pleasure speaking with you. So let's kickstart with the targets that you have for this year. In the fourth quarter, what was your volume growth? And what are you targeting for FY25 with all the capacity that has come on?
Yeah, so we had a total volume growth for the whole year at about 14%. We were actually impacted because of the roaster breakdown that happened in our quarter two, which we had announced earlier. So we were not able to make up for that balance because of the higher coffee prices. But this year being a more normal year, again, we're looking at about a 15-20% volume growth. And only one uncertainty that is there right now is with the coffee prices going up so high, people are not willing to give more long-term contracts. They're working on a 2 to 3 months basis only. So this is one of the first years for us where we don't have normally we have about 85-95% of confirmed orders before the year starts. This is the first year we have only about 60% orders in place before the year started.
Okay, Challa, Vivek here. Also, you've mentioned that there aren't too many long-term contracts in place for FY24. Give us a sense of the kind of contracts that you're getting into and what kind of revenue visibility do you have? The second question is, as far as EBITDA per kg is concerned, the key metric that we track, what is the outlook for FY25?
Yeah, so one, with respect to the long-term contracts, the different types of customers that we have, there are certain brands that place orders with us a year in advance, or sometimes even 2 to 3 years in advance. So that business is normal. So they don't really care about the fluctuation in prices. But a lot of repackers and resellers, these are companies that don't want to take too much of a risk. So whenever the prices are on the lower trend or if they feel there's going to be a correction, that's when we start getting more orders from them. And the second question, can you just repeat once again?
What is the EBITDA per kg? What is it that you're guiding the street for?
Yeah, so the EBITDA per kg also is still the same. It's about 105 rupees approximately. And we are expecting it to be along the same lines, maybe a slight improvement because of the mix change that we're expecting this year. We're focusing more on small packs and on more premium products as well. But we're not expecting any drastic change in the EBITDA per kg. And volumes, since they'll increase, automatically the EBITDA, absolute EBITDA also will be increasing this year.
All right, so absolute EBITDA increase, EBITDA per kg closer to around that 100 rupees per kg itself. You spoke about small packs and premium products. What exactly is the contribution currently from both these verticals, and how much do you anticipate them to be by the end of, say, FY25 and early FY26?
So small packs and premium products, both put together, around 35% of our production comes from these two segments. We're increasing by maybe another 5 to 10% is what we are targeting this year.
All right. And your capacity expansion, you have existing capacity coming in from freeze-dried capacity coming in from Vietnam in the second half of this year. Where does your total capacity stand at right now, if you could give us a sense, and what's the capacity addition, both spray-dried and freeze-dried?
Yeah, so today our India expansion just got over in the month of March, and we are currently at around 71,000 tons. Our freeze-dried expansion should be completed by around August. Then we will be at 77,000 tons.
Okay, so capacity expansion in India you've spoken about. Give us a sense of how the London-based brand's performance actually panned out. Earlier, you said that you're looking at a target sales of close to 100 crore in the next 2 to 3 years. So is that on track or any changes over there?
Yes, we are on track for that. So the first year itself, we did about 12 crores of sale. And this 12 crore also is basically what we had done was we had taken over a declining brand and we focused on doing the transition during this first year. Now we are relaunching the entire brand with the new formulation, with the new artworks and everything. We are going back to basics. One of the insights that we got is that the reason for the brand decline also was the change in product formulation. So the product formulation that we originally came up with initially, that is what we are reverting to now. So we're expecting that volumes to start coming in going forward.
All right. And what about the domestic branded business? You had a target of over 200 crores for FY24.
Yes.
Where did that number end? And this year, what's the target?
So we were at about 210 crores this year for the domestic branded business. We are looking at maybe around 350 to 400 crores for the current financial year.
With EBITDA positivity?
Yes.
Challa, one more question from our end. You've mentioned quite a few of these points, but it'll be good to get clarity on all of them. Just reiterate for our viewers the FY25 guidance. You did say you're expecting volumes to grow in the range of 15 to 20%. So what is the volume range that you're targeting? The revenue? You said EBITDA is going to grow. So what is the EBITDA that you're targeting to grow? Margins and the bottom line?
Yeah, so the revenue growth will actually be dependent on the raw material prices, which are fluctuating and kind of all over the place. So one of the reasons why you can see the kind of revenue growth closer to 40% now is because the prices of green coffee have almost doubled. But in the last couple of weeks, they've started softening. There was almost an $800 correction that took place, which was in line with the new crop coming online. So if the markets correct further, then that revenue growth also will get accordingly adjusted. So revenue growth is something that we are not really very confident about giving a guidance on because it's fluctuating a lot since ours is a cost-plus model. The EBITDA growth is something that we are more confident about because it's directly linked to the volumes. And the volumes is what we're looking at, that 15 to 20% increase.
All right, final couple of questions before we let you go. Challa, if you could currently give us a sense of what your domestic market share is in the stores that you operate, so the addressable market, how much would that be? And secondly, on the balance sheet, because of all these expansions that you're doing, debt has increased as well. Where does it peak out? When do repayments begin?
Yeah. So as far as the domestic market is concerned, in South India, in especially AP and Telangana, we have almost 11-12% market share. This year, we are actually starting to target other states as well. So our market share is likely to increase over there. As far as the debt is concerned, this year actually is when we are expecting the debt to peak out. We were at about 1,600 crores last financial year. This year, we're looking at about 2,000 crores of debt. That's working capital of almost about 1,400 crores. And the balance is the long-term debt. But a little bit of restructuring that we're doing internally and optimizing our finance costs as well. So it's not going to be a significant impact on the balance sheet this year onwards.
Thank you so much, Challa, for joining us and answering all of those questions. When you're talking about CCL products, a little bit under pressure today, but the long-term guidance, FY25 guidance, is quite strong. Let's now slip into a short break. Up next, we will put focus on Syrma SGS Tech in our mid-cap spotlight segment. Stay tuned.